So Bank of Canada, okay, let's just talk about those nice folks. They meet in April. Obviously, is there an April meet? It was an April meet. I believe it's the end of April they meet. It'll be interesting. Got to read the comments, see what Tiffy and Carolyn say. Bank of Canada risk management. All right. It'll be interesting to see what their outlook is on the economy. I think they're going to be throwing out warnings like no one's business. I just think it's going out there. They're going to be like, hey, watch out what's happening. Probably going to see some movement in rates later on. But my guess is they're just going to monitor things because you just don't know yet. They got to wait for all the data to come in before they really jump. Because we know inflation is going to go up. Of course it is. Food and fuel, period. End of story. Right. And again, that's their only job is inflation. Okay. That's rates. Now, let's now change. Oh, sorry. Can I come back to one more thing on rates before I go away from there? Variable versus fixed. I want to talk about this because this worries me a little bit. Yes, variable rates right now as we speak are lower than fixed. Guessing prime minus 0.75. So prime is 4.45 as of today. Prime minus 0.75, 0.3. Like it's still minus for the most part. And remember, variable does go prime plus. We had prime plus in 2019, 2018, 2019. I remember we were doing mortgages at prime plus 0.25. That happens. It doesn't always go negative. So on the variable side of things, where I'm worried is some people will jump on the variable bandwagon just because the rate is lower. Now, I've heard strategies. We'll just take the variable and lock in later. Okay, sure. Assuming the fixed rates are still going to be lower. Because remember, if you got a variable offer right now at, I'll make up rates, 3.75, and you got a current fixed rate at 4.35, when you decide to lock in that variable rate, you don't get the 435 you started with that you could have had. It's whatever the fixed rates are at the time. So it's all fun and games. You can take the variable and roll the dice to lock into a fix, but you better hope the fixed rates are still lower when you go to do it. If we've learned our lesson from 2021, I think I've said this on the last episode, people could have had 1.7% on a fixed or 1.6. They took the 1.35 variable because variable never goes up. They all learned their lesson, present company included. Don't get greedy. Don't get greedy. So lots of strategies. And I think I mentioned that earlier in the podcast where we got people making kind of decisions that maybe it's not the best fit for them. That's one of them. That's one of them. The one client I mentioned that took that other rate, they shouldn't. It's too risky. They can't afford the risk. So yeah, great. Take a variable, lower rate for now. But if the thought is to lock in, there's risk. There's risk there, folks. It is what it is. So be careful. Fixed versus variable. This is where I also, if I can bring this full circle and then hopefully we can move on away from rates. Having a proper mortgage broker, agent, a professional, not just a bank launching rates at you. This is where this comes in. Maybe the best option is fixed based on financial maturity, financial life stage, amount of debt, income, risk. Like the list goes on. Don't just take a rate the bank just launches at you. Get some advice.